Let's begin this morning in Australia because a planned strike by workers at two massive offshore gas plants there run by US major giant Chevron highlight that even with a small dip in inflation recently, wage pressures are not easing. Unions are asking Chevron to improve pay and conditions, and workers at rival Woodside Energy last week managed to reach a deal on conditions and Shell last year. In a couple of hours as well, we'll be getting the latest reading on the country's consumer prices in July. 2 to 3% is the target. Australia managed to achieve that from the 1990s, but since the pandemic, Australia has seen inflation rise outside the target range like it has around the world. The Reserve Bank of Australia will be holding its monthly meeting next week to decide on the cost of borrowing as well. Let's bring in market analyst Peter McGuire of tradingpoint.com, who joins us live. Thank you so much for joining us on the program. I do want to ask you about inflation and so on later, but firstly, how much of an impact will this planned strike by Chevron workers will have on the country's economy?
Well, I think it'll have quite a big impact in the sense if it doesn't get resolved. You've got 500 workers, two major plants, Wheatstone and Gorgon, and they produce around about 5% of global supply. So it's a major impact, and certainly Asia would be would feel it more than anywhere else in the world.
And I guess it highlights that wage demands are rising despite that dip in inflation that we saw recently. What will be the impact, in your view, on the central bank?
Well, as far as central bank's concerned, we're seeing, hopefully, with retail sales, they were fairly strong. So if that's not a bad point, it's normally a good point, but that could fuel further inflation. We're expecting inflation to come down. And that could be a good sign as far as RBA policy next Tuesday with no rate rise. But we've just got to wait to see how that number drops.
Yeah, it's coming out in a few hours, doesn't it? And as I mentioned, the target is 2 to 3%. What range are you expecting the number to come in?
Well, it'll be between there. And if you're looking at an annual rate, we're looking at 5.2% for July, down from 5.4 in June. So that's a year on year. And I'm thinking maybe, low twos would be a great number, or to mid twos, but we've just got to see how that drops. And it's very much in the number.
But aside from inflation, wage demands that we keep talking about, the economy itself, it's been quite resilient, hasn't it? Recovering from the pandemic and despite some trade tensions that it had with China.
Absolutely. I mean, the economy is doing quite well. We've had not a bad stock market considering the first 8 months. Growth is fairly strong. We've got good retail sales and the overall consumption is up. So we've just got to see as far as inflation data and, of course, economic health leading into Christmas.
Peter McGuire, thank you so much for joining us. And of course, we will be keeping an eye on that inflation data when it comes out.